Looking at some more Elliott Waves. That's what everyone wants. You're getting more Elliott Waves. This is Brian Lewis with MMT Investing, and things just changed. So I wanted to point out that in our crash here, the Elliott Waves are clearly not straight angular lines. All the lines are curved, and I'm going to look at exactly how that is shaping up for us here. So please smash that like button to help me out with the YouTube algorithm. And let's do some curvy stuff. So we can see the big obvious Elliott wave that we have here is an A, B, C corrective wave. But if we follow the A, you can see the A wave is curved out. The B wave is curved out above this support line. This one's curved out above this tangent line. And then you can see that the C wave is actually curved the other direction, and this is a consolidation pattern on this one. And so if we repeat that pattern out on our higher level here, just to help us look at the kind of shape of a wave that we want to see. So we get our higher level A, B, C corrective wave, and you can see here the same kind of pattern around this long-term tangent here. We get the A is curved out, and the B is curved up on top of this support line, the bull trap support line. And now we want to see this kind of angular and then swooping downward curve the other way wave on this section here from our bull trap support down to a sort of tangent line down here somewhere. And we're looking at a dead cat bounce above this line and a bull trap back test underneath it. So, but we just slice right through all that stuff and ignore it for the moment. We just want to see a downward wave that starts kind of swooping forward, something like that. That's the kind of wave that we're looking for our next C wave bottom. And the price target, I don't know. And the time target, I don't know. But the shape of the curve is what's important today. And then also along that curve, you can see that we get up off of that curve to do a dead cat kind of back test. And oh yeah, I did a support line on the last one for the dead cat. Yeah, so there's the B wave kind of supported the, oh sorry, let me do this real quick. There's a 1, 2, 3, 4, 5 Elliott wave on both of these bull traps, 1, 2, 3, 4, 5. And the 2 wave down sort of supports the dead cat bounce on this one. And then we get back up into a tangent. So I was looking at this area for a dead cat bounce. And if we draw that wavy, curvy wave thing, that kind of as sort of the bottom support. So an idea for a dead cat bounce movement would be sort of a 1, 2, 3 up into this before we get back down here to a tangent somewhere. We'll worry about that later. But right now, this is the heads up. We're looking for possibly another back test of this line because it is crazy, and then a sharp move down to dead cat bounce area. And then the dead cat would be a very, very tiny and very specific long target for things like gold and for oil tankers and possibly like corporate bonds or maybe a medical kind of thing. But the general downtrend here is down. It is down and it's short, and that's what's up. And the next long target, roughly, I think this target is reasonable just based on the bottom of this and the angle of the waves and everything like that we have set up. I think this is a really good area to look for a bounce. And we can go in, actually we can go in here and then check out the downward movement because it's not going to be a straight line. So we get these kind of L-shaped downward movements along this swooping line, and then we get the big dead cat above it. So if we do that kind of thing, we'll be looking for some L-shaped stuff, and then L above this tangent, L below this tangent, and then the dead cat area. So that's kind of the outlook. That's kind of the outlook of the next wave down, and that's not the whole wave down. The whole wave down is this whole thing, but that's a longer term kind of shape, and there's a lot of stuff on the way that we're going to have to deal with. I mean, we have this dead cat bounce area to look at. We have this whole second bull trap area, and then we have a giant consolidation area on the last cycle. So if this starts repeating just like this, we'll have some really good ideas of what we're looking for on the way, on the ups and the downs here in this cycle, which is a 3. I've been saying 3, but it's shaping up to be more of a 4-month credit contraction cycle, which in general has a down and then a bounce kind of shape for a credit contraction cycle. And we've switched into a bear market, hence the angled tangents that we have here and the reversal top, obviously, up here. But this is a credit contraction down cycle in a bear market, which is quite a thing, and it also appears to be the top of a huge bubble. And so we're going to try to get these wave shapes correct and work on some targets. And here's what's coming. Based on the repetition of this wave shape and these curves, we want some action in here. Some action in here, and then yeah, so I guess this is not financial advice. I can talk about my positions a little bit more if you're interested, which is right now 80% of my portfolio is cash, which would usually be in treasuries and DXY and cash kind of. If I'm going to do cash, it's not usually going to be cash, like straight cash, but right now it is all cash because I'm transferring it. And then the 20% of my account that I have speculative for shorts is 100% short right now. And I'm short to this target right here. And I'm short a lot of tech stocks. I had oil shorts. I sold all my oil shorts because oil crashed early. And I went up and got more tech shorts. And we're looking at around, whatever this is, May 12 or something. That might be early. Yeah, I would say in here, whatever, that week, May 12, 12, 13, 14, whatever, in here. Let's look at the time on this. Yeah, that's pretty close. Yeah, 12. I think I said May 14 on my last video. So probably it's a little bit farther stretched out than what I have here, because the angle on the first part before the dead cat bounce is less steep than the angle on the second part here. But where it starts is not, it's pretty straight actually. If you go to the bottom of the dead cat and then come down here, it's not that much steeper. So yeah, okay. I don't remember what I said last video, but I draw squiggly lines, and then this target's not super accurate. I mean, I do like the bottom of this B wave as kind of an area to look for in this range. The 24s. I like the 24s for a dead cat. Let's look at the percentages a little bit closer. I mean, where is it? About halfway. The top of the dead cat's about halfway, right? And it's close to the top. Let's see. It's pretty low. The bottom is lower than where I have it now relative to this line. Also, this yellow line is not hard fixed here. I've been trying to wiggle it around and figure out where the bull market line is, but I don't have a history on this chart to put a really good bull market line. And plus it's like 40 years. So this line should really be curved a little bit. It's not really a straight line. So So this is a rough area where I think that the long-term bull market line would cut through this chart, and then this, yeah, it seems like between, yeah, it seems like this kind of area. This looks about right. I think it's in this area that we should be looking for a dead cat here. And then it would be a dead cat to this tangent that comes off of the 3 wave. So you can see we get the 1, 2, 3, 4, 5 wave here, and we get the inside tangent. Here we have an inside tangent that hits the top of the dead cat. And out here we have this 3 wave inside tangent that should hit the top of the dead cat if that repeats. And then we have the outer tangent here that thing is out to the whole next cycle, like several months away. That's like 2 months away when we need that tangent again. But that'll come into play on a larger cycle. And yeah, all right. I'll just officially remake my targets based on my squiggles here as, yeah, I kind of like this super choppy, messed up area for a bounce target. I like this area for another back test, like around 2861, May 4th. May 4th, 2861. I think we're going to get another back test. I don't think the Bulls just gave up and we're just off to the cave or off the waterfall. Oh yeah, I am wearing my swim shorts today for the waterfall. So, just so you know, the waterfall is on and I am wearing my swim shorts. And most of those shorts are tech, our XLK stocks. I've mostly shorted stocks within the XLK at this point, and I have a couple other shorts, but I've been looking. You can go back and look at my short videos. There's a bunch of shorts that I like for this cycle. The sectors that don't do that well in this kind of credit contraction cycle is like energy and tech and industrials. And of course, we've already seen the oil crash, so energy is a tricky one now. And industrials have a lot of military, which I don't love shorting military. But that sector in general, I have some looks at industrial stocks that are not military, individual industrial stocks that might be good shorts, and then I have a bunch of tech. Like the whole XLK is a good short, and all the stocks in there are interesting. Like good balance sheets in the XLK that look like they're going to get dragged down, or like the worst balance sheet in the XLK looks like Dell. And I have a bunch of Dell shorts right now. And then the XLK itself, I mean, as we saw with the USO, it's entirely possible for the ETF to do even worse than all of the underlying assets, just because of the way that derivatives and the futures are built into the ETFs. You can actually have your ETF do worse than the stocks inside the ETF. So just shorting the ETFs looks like a good idea, or you can do tricky shorts with specific stocks that are in the different ETFs. And that's what I'm doing on this leg down now. And then here looking for gold and the oil tankers on the up, and then maybe some corporate bonds, maybe some medical kind of things. Okay, so that's a lot of things. And what did I say? May 4, 2860 on the back test, and then May, that's 12. I'll just say 12. I think that seems a little soon. I think 13, maybe. I think I said 14 last time, something like that. The middle of May, May 13 at 2464 is a rough target for the dead cat bounce area for a bull move in the middle of this downward wave. So this is whatever, Brian Lewis, and please hit the like button if you'd like me to keep posting content. And this is not investment advice, and I'll keep working on these lines. We're not quite to the point of looking at the consolidation zone or anything like that yet. And this is several weeks of trading that we have to go here. But I definitely would like to note that I have zero longs this week, zero longs this week. And I did a little review on Peter Brandt also a couple days ago, or yesterday maybe, um, talking about how he just sold all of his longs. So he has no stock holdings at all now. He's like, this is too crazy, and anyone that wants to give me these record high valuations for my stocks at this point can have them. He's happy to take the cash and just, he doesn't have a model like this. He just thinks the odds of it going down from here are a lot higher than going up from here. Um, so from a fundamental and a cyclical standpoint, this is the look. This is a cyclical model. This is not a fundamental model. The only fundamentals that exist in this model is just the contraction of the monetary system. That's it. This is like a mathematical derivative model of the contraction of the monetary system, and the fundamentals are a derivative of that contraction. So it's like the entire public sector is pro-cyclical. It's a result of how much money is available in these loan credit contraction cycles. And that's all you're seeing here is just this is a credit contraction cycle. And that's what you get here with this model. So it should be interesting. And a couple more days, we'll see if we're going up for a back test or not. And that's that. So happy trading.